Hello, Jim here. Happy New Year. Today I want to talk to those of you who are nearing 50 or over 50. I think selling options or trading options in general is a great avenue for making extra income on a monthly basis. It can help you reach financial independence quicker than you ever thought possible and potentially even retire a lot sooner. So today I'm going to share with you how it's worked out for me. I'm actually going to take a look back 3 years ago when I was just at the beginning of my journey and how it's radically changed since then. So stay tuned. I think it's going to be well worth your while. Okay, let's go ahead and jump right in. I do want to give a quick market update. We had kind of a rough end of last year, and this morning the market was up nicely. It's actually the 2nd of January. But now I just looked a few minutes ago and it looks like we're down, or most of the markets are down again. So I don't know. I think that's probably going to continue. Unfortunately, it does remind me a lot of 2022. At the end of this video, I'm going to share with you one of my videos back from 2022 where I share some details on my trading at that time and how I'm hoping this isn't the case, but it does kind of look like 2022. Now, the big difference is we do have a new president, Trump's coming in, and there's just a lot of uncertainty. So I think we may struggle through the first couple of weeks until there's a change of administration. Then I think the market may kind of bounce back and head up to new highs. So at least that's my 2 cents, and it's probably only worth 2 cents. So why do I say that most people, if you're 50 or above or approaching 50 or pretty much any age, trading options is a tool that should be in your tool chest? I have been trading options going back 13, 14 years, started with what's called covered calls, where you can sell options on stocks you already own. So I started selling options on Coca-Cola. And you may wonder, well, what is an option if you're new to my channel? Well, someone will pay you for the opportunity to buy your shares. So you're just earning income in a sense of just by owning those shares. And like I said, I've been doing that for a number of years and it's worked out really well. 3 years ago, I really started my journey. I wanted to learn more. I wanted to learn about, puts and all the different types of strategies out there. So I kind of did a deeper dive and I've been on a journey since then. Now, it's not a get rich quick. It's not something that happens overnight. It definitely is a journey, and you become a better trader as you learn more and more. It's not something for speculation, or you should minimize your speculation or taking huge risks. And that's why I'm kind of gearing this to people over 50. If you're approaching retirement, you don't have a whole lot of time. If you're in your 20s, 30s, or 40s, you have a little bit more time to make adjustments and fix mistakes. But for people approaching their 50s, it's better to be safe. I like to describe myself as an investor than a trader. It's extra icing on the cake. At least options are extra icing on the cake. So I set goals. I'm getting ready to set my goals for 25. And I typically set a cash goal. Like last year, on a monthly basis, I tried to earn $7,000 in premium every month. And that doesn't include interest and dividends. I also earn quite a bit with dividends. And now with Fidelity and their True Sweep account, I'm earning pretty good interest there. They're still paying like 4.15%, even with the recent reductions that the Fed has had. So I set those goals. I did set, I believe, the beginning of 24, I did set like 8,000 per month. And I lowered that because I was struggling to reach that. But I was able to reach my 7,000 goal on a monthly basis. So this year, I'm thinking I probably will increase it, probably along the lines of 7,500 or 8,000. I really don't encourage people to push yourself too hard with options because you could end up taking too much risk. I found that happened to me a little bit back in 22 when the market took a dive. So I encourage people to set a realistic goal. Don't make it too easy, but do set a goal. I find that if I reach my goal early, or if, I can break my goal into a weekly. So if I set 7,000 on a monthly basis, then a weekly would be, 1/4 of that. And then I can also set daily. So if I reach what I need to reach on on a particular day when I've had a really good day, I may stop trading. A lot of times I do stop trading. I'm currently working part-time, so I don't spend a lot of time on the market. I usually do 1 or 2 trades and then get off. But again, I'm able to generate quite a bit of income. And then when you pair that with interest and dividends, it can be a significant amount. I've done monthly reviews where I share that, and December was one of my best months. And I'll probably do that review in a week or two. Now, is it get rich quick? Is it, it's still investing, meaning if you do pick some stocks and they don't do well and they drop significantly, that's still going to continue. And that would have happened anyway if you had purchased the stocks. I like to sell puts instead of just buying the stock. So if a stock's 100, and a put is the reverse of a call, meaning someone will pay you for the opportunity to sell you shares. So I'll look at a stock, I'll say, well, it's 100, but I want to own it at 90. So I'll sell a put at 90. So in a way, if you stick to that and you're truly investing, the risk is really diminished. And then the other point I wanted to make is with setting goals, I also set goals for dividends. I don't really set goals for interest other than I moved all my accounts over to Fidelity so I could get that higher interest rate on the spreads. And you might wonder, well, you can also do SWVXX at Schwab, but you have to move money in and out. Now at Fidelity, I can leave it, and it's true sweep account, meaning any of the cash that I'm earning, or any of the cash I'm using puts for, I'm still earning some good interest on that. So it does make a big difference. And, when you look at it on a monthly basis, it can be significant. So it kind of gives me a minimum of earning, 4.15%. Used to be over 5. I think it was as high as like 5.15% at one time. But it can make a big difference. And then I also review my trades. So I also rank them, and I'll do a little bit of that in this next part of the video. And then I'm going to kind of share what happened in previous years. But my biggest mistake this year, just because I track everything on a monthly basis, were the few times I did speculate. I speculated that Micron would have good earnings and good guidance, but they had good earnings but not good guidance. And that was a bad trade. I also made a mistake of betting against Palantir. At one point I thought, well, they can't go any higher, so I'm going to buy a put. But they kept going up, and that put ended up being worth little to nothing. I think I sold it for a little bit. And then the last one, it was a bit of fear. One of the podcasts I really like is Invest Talk. And Justin, who's on Invest Talk, was very concerned about Tesla. This was probably 6 months ago. So I bought a put for protection on the downside for Tesla. So I never really needed that. I could have probably not purchased that put. But in a way, you could say, well, it worked out because Tesla went the other way. So you did protect yourself. So speculating has not worked out well for me. So this year, I'm going to strictly stay away from any kind of speculation. And that includes staying away from earnings. I've learned the hard way. If you trade right around earnings, you could potentially get yourself in a rough spot. And then picking companies, when you do pick individual companies and you do 20 or 30 like I've done, you're going to have 4 or 5 that are just dogs and don't do well. I've had that with like Intel has had a rough time. I do think it'll bounce back. Polaris, Walgreens, CVS, some of those companies really took a hit this year. So next I'm going to share with you my planning worksheet and talk a little bit about my trade rankings and how I'm trying to improve on picking the companies as I go forward. And then, like I said, we'll jump in and look at a small part of a video from back in 2022. So stay tuned. I think it's going to be real interesting. Now I've opened my planning worksheet. This is what I provide to my community or my membership. And I provided one on Sunday. That's typically when I do send an updated planning worksheet, but I did send this one out yesterday on January 1st, 2025. It has my different positions. People can delete these and put their own in there. or they could follow the different kind of trades that I'm currently making. I also have a section on favorites. These are my favorite go-to companies I like to trade. Then this is what I was talking about in the beginning. This is how I rank my trades. I also like to look at what's worked out, what hasn't. The major takes where in some ways avoiding ownership might do better. If I did not own certain stocks, I could have potentially done better. If you work just with ETFs, so again, for those of you who are nearing retirement and don't want to take as much risk, without a doubt, what I've seen with all my trading over the years is ETFs are safer, and that's even more so with options. I rarely have had assignments with ETFs. So my biggest issue with ETFs is selling calls too low and then finding myself deep in the money. But I've only had a few of those also get assigned away from me. And then strategies within strategies. I'm beginning to play this. It's more of a different way of looking at things. So I have what I call my monthly wheel strategy, where if you have a small account, it would work out really well. Then I also have what I call my spread wheel strategy. So I'm running these strategies within my portfolios, but only using a specific amount of required capital. So, and that's been interesting. It's worked out pretty well. Now, I did focus too much on the chip makers. I do think they're going to come back. They typically move in tandem, so they've been hammered quite a bit over the last couple of months. I don't know when they're going to turn around. I wouldn't be surprised if they get a major turnaround right after, some clarity comes about because of tariffs. Right now I think there's a lot of fear that chip makers are going to be tariffed to death or something. And those are companies like Micron, AMD, Intel, Applied Materials, and so on and so on. And then there is an argument with sticking to the big boys. They do have lots more premium and open interest, and you can potentially do a little bit better. So again, I provide this all to my community. We talk about it. We'll probably talk about it. We have another meeting this Sunday coming up, and we'll probably talk a lot about this. Now, I also have goals. I have checklists. These are different checklists, what I like about companies. We have guidelines, the guidelines I use for calls and puts. And again, for those of you who are members, this is all within these planning worksheets I send out on a weekly basis. And in goals, this is what I'm working on now. What will my goals be for 2025? I talk about, how much I want to earn. My goal for last year was 7,000. Originally, I believe it was 8,000. Then I brought it down to 7,000. I also talk about increasing dividends and interest. One of the things that I'd like to mention to people, if you only want to do safe strategies, you could just do covered calls and just sell covered calls on assets that you already own. A common thesis within the options trading industry is you can typically double your dividends. So if you're earning, 3,000 or 4,000 in dividends on a monthly basis, you could probably double that by just selling covered calls. And, you're not talking a lot of time, maybe a couple hours every month for the same covered calls. And that's what I did for a number of years until I took it a little bit more complex with selling puts too and getting into more complex strategies. And then also a goal of growing my portfolio. A lot of this relates to, how the markets do. If we have a rough year in the market, I found I typically do a bit better, mainly because you have all this cash coming in, which kind of gives you a buffer. So what I found over the 3 years I've been trading both calls and puts, I've done better than the S&P 500 on bad years. And then on good years, I don't typically match it. I come close, but if you average, 2 or 3 years together, I found that I come pretty close to matching the S&P 500. And it, that changes month to month. This could be a terrible month and kind of like February or 22, and I don't match it. So, and you can see here, I also share how I did each month. So you can see December, which I'll talk about later. And I also mention what was assigned to me. So I keep pretty good records. I talk about notes about the goals. So it works out quite well. So I wanted to share with you guys a video from 2020 22. It was February of 2022, and I was looking, kind of reviewing some trades, and I think it would be an interesting thing to go over. So I'm going to share that next. This next part of this video, I wanted to go down memory lane back to February of 24. February was, well, January and February were kind of rough months. 22 was, I believe the S&P 500 was down quite a bit. But this is kind of interesting. It also talks about, at this time, I had compared how I did to an advisor. I went back through old statements, and I just thought it was interesting. It's something for those of you who are in your 50s looking at retirement. It may kind of give a little bit more credence on why potentially you might want to do some of your own investing. So let me just go ahead and run it. So you'll see I've come a long way. I still have a long way to go to become a really good YouTuber. But you'll see my audio was not as good back then. So let's just go ahead and play them. I'm going to play about 4 minutes of it.
So not bad. Now overall, I made, so the monthly total of all the premium for the 6 trades was $536, and that translates to a 1.03 monthly or 12.4 yearly return. This is some stuff that I had added early on, and I've talked about it in other videos, but before I got into selling options from 2016 to 2020, I was running, pretty much managing this account myself, and I earned around 9.5%. So I was just sharing that, and how if I continue to have good positions and earn that same amount, and then also can do the 12.4%, I could potentially earn 21.9%. And that's assuming, I don't think this year we're going to, this could be a down year. We may actually lose at the end of the year. We may lose 1 or 2%. But in those 4 years, that's what I was able to earn, which is below probably what a lot of people could do out there in the market during those years. But at that rate, I could potentially, using the rule of 72, double that account in 3.5 years, a little less than 3.5 years. So I don't know if it's a really good calculation, but I like to look at it. If I can get this up to 18, this could be 2 years. But with the markets being down in January, and I think today is a down market too, it's going to be a little bit harder to earn those really good returns potentially this year and maybe even next year. So, and what I'm doing with this advisor return, I did have an advisor back from 2111 to 2015. Actually before that, but my statements, I could only get them going back to 2011. And I only earned 4.8% during those 4 years. I actually went back and did some calculations, and I was paying the advisor 1% for that account. So I'm definitely been doing better since I managed it myself. And if I can earn this, and so far I've been able to do that, other than last month when I did take the loss with ARC. I definitely can do better than that, and I'm thinking I can do better than this even if the market goes down. Say the market goes down by the end of the year 3%, I'm still doing better than I probably would have done here, or comparable. So, but if these investments that I have in this account go up, then maybe I can reach this close to 22%. So that's just kind of some fun stuff I like to add. And I don't know, it'll be interesting looking back over these videos if I've been able to actually accomplish this, that when I'm closer to 59 and a half or 60, do I actually have 100K in this account? So I'll probably will look back and see what happened. So these are some important notes that I wanted to add. So again, 4 puts and 2 covered calls. So, and there weren't many trades. I think only on one day did I do 2 trades. All put positions less than $60. So these companies that I shared are value companies, and they're very reasonable, and they're all good dividend payers. I think Cisco may be the lowest dividend payer at around 2.5%, and Lumen is close to 8%. Also good delta with all these.
Okay, hopefully you guys found that interesting. What's really interesting is 2 of the worst performers back in 22 were Lumen. I took a big loss on Lumen, and then above IJH, again, ETFs worked out really well, was Big Lots, and Big Lots was the other one that really was a dog. So have I been able to meet these goals? I have come close at times, but again, a couple of really bad plays. Lumen was 80-90% loss, and Big Lots, same thing. And with Lumen, it was a lack of looking at debt. Now I do look at debt. Seeking Alpha has helped me quite a bit with that. Cisco has done well. Intel, bad management decisions. I do think they may recover, but I still own the shares. They were assigned to me. In Big Lots, I don't know that it exists anymore. I think all the stores have closed. I think they went bankrupt. So it's just interesting how things can work out. So one of the key points here that I'll probably look at this year too is, should I just do ETFs? Is it so much safer? I may try that as a strategy within a strategy. So I hope you guys enjoyed this. Hopefully I didn't go on too long. As always, thank you for taking the time to watch the video, and I hope you have a wonderful 2025.